Time is 9:02 a.m. Eastern Standard, 7/8/2014. Our live trading room has identified where the high probability trade set up to the downside. We have just had a test through support at 66.50. Price is trading at that level, 66.50. Trading our primary market, the S&P 500 mini futures. You're seeing a 1-minute chart. Real time. Near contract month being traded is September 2014. We now have substantial more volume that's come in. We're looking for the close. Accumulated volume here now at 66.25 for the preferred entry price. This is the earliest possible entry for the best fill for the downside setup on this trade. Some odd seconds left within the current 1-minute bar. Just about there. Just about there. $2,092 lots traded in the last 1-minute bar. Current 1-minute bar is holding 66.25 traders. The MA is clear to be short. Checking money flow clear to be short. SMI, MACD. MFI on another screen is clear to be short. 1-minute chart. We do not have the close yet at 66.25. We do not have the close yet. We are very, very close. Holding. 9:04. 7/8/2014. Holding. Now up 66.75. MTM. $66.75. Once again, your contract month, E-mini. September 2014. It's now 8:05 a.m. 7/8. Looking for prices to fall to get that fill. 66.25. Fifteen-minute indicators are clear across the board to be short. Holding 66.75. Waiting for the final confirmation. $66.50. And there we have the test at 66.25 once again, people. At 66.25, some odd 26 seconds left within the current 1-minute bar. 15-minute indicators are clear across the board to be short. We have a high probability trade set up to the downside across the board on our 15-minute charts. So once again, we're clear. Holding. 66.75. Current configuration of the money flow index. Trendline violation intact. Found a superior resistance internally. Momentum to the downside clear to be short. EMAs remain clear. More momentum to the downside. Additional momentum out of the shaken money flow clear. 2 trendline violations. SMI. MACD disparity widens after the trendline violation. Great setup. All the probes are here. Just waiting for the trigger. Waiting on the trigger. Accumulated volume is good. The volume spike that came in here and there we have it. Our methodology has identified with, and we are now clear. Short. We're short. We got it. In the trade, looking for the targets to the downside as established. Now remember, people, here first and foremost at 65.75, we have a daily level. Prices will hit this and bounce off it immediately, or we'll go right through it. We have the best possible fill that any trader could get, and we have substantial targets set to the downside. You already hit on a low basis here at the daily level. I wouldn't be surprised if prices bounce and then continue through. The accumulated volume that came in as strong, and the actual spike that drove us through was for over 3,500 contracts, so that's positive. And it appears to be a short because of the money flow indicators. So we'll ride this out, and if it doesn't go, we'll be out immediately and take a small loss. The overall setup is very, very good at this point across the board here. We are clear to remain short traders. This is Jeff Killian, a Chief Market Strategist for the Inside Technician. It's 9:10 a.m. on 7/8/2014. Managing the trade in real time. Remember, daily level is hit like we talked about earlier. It's either going to go or prices will retard, possibly move sideways, aka net neutral, even trade up marginally. If prices stick at 66.50, even after the preferred in, that's good enough resistance level, close enough to the preferred in, possibly even a tick above, to remain in a trade in anticipation that the price will continue to move to the downside. Any more than up above this level, one would want to be out of the trade looking for the next attempt to be in. The setup is real strong to the downside. Once again, it's either now or it's again later, and at that time getting through the secondary levels here for the fill at 65 and 25. 9:12 a.m. 66.25. MFI remains unchanged, clear to be short. EMAs are clear, MFI's clear. Chicken's clear, 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 clear. And price is up another tick, now down a half on a retracement to the upside, right here, and back up another quarter. That's a temporarily off. Get out with a half here on a loss, and look for the next opportunity. So basically at the end of it all here, down a half, full well knowing ahead of time what the possibilities were and willing to take the risk in lieu of getting the best possible fill with the trade never looking back. That hasn't happened. So the flip side is the prices will trade up marginally. Market will open, find direction, and we're looking for the move to the downside. That move will more than likely now happen after the market opens once again. As directional movement continues to the downside, things become clear, we can be back in once again. 65 and 25. Jeff Killian, Chief Market Strategist for the Inside Technician in our live trading room, trading E-mini near month, September 2014. We've entered a trade at the preferred entry price of 65 and 25, managing the trade to the downside, people. Setup is strong across the board. Volume is heavy, institutional selling. Target set at 63 flat right now. Next level to the downside. Flying in, checking money flow on additional screen here. Still clear on both fronts, MFI and CMF to remain. Be short. MTM 64, 63.75. Below 63, we have laid out 61 and 50, people. That's 61 and 50. Excellent target. That's 61 and 50, people. Price trading now, 63 and 75. That's 63 and 75 traders. Both CMF, MFI clear to be remained short. You have an excellent profit locked in already, people, early AM, getting into the preferred in the 65, 25, possibly even 65. You're at 64 for a point. Now three quarters. Prices hold at 64.25. As internal resistance, there's an opportunity to keep moving to the downside with a very short-term correction to the up. The MFI and CMF are clear to remain and be short. 63, just short of being hit. Price now moving to the upside. $64.50 MTM, that's $64.50 people. Just a tick short of the 63 level here, people, that we saw earlier. 61.50 here is below that. And then below 61.50 we have 60. That is 60 people. Price is now holding off of resistance as suspected. Possibilities of continued movement to the downside. MFI remains clear to be short. Checking money flow clear to remain short as prices continue not to move to the downside again. 63 flat, price profit target hit in 65.25 to 63 is 2.25 points quick, picked up early this AM. 2.25 points in, out right here at 63 on a substantial 15-minute level. You can take that off the board right now, traders. Look at the size of the move, people, 63. You can take that off the board. Next level to the downside is 61 and 50, traders. That's 61 and 50. Right here. That's 61 and 50. 63 is a sure thing right here. You're still up 2.25. You're good. And looking for a possible secondary leg. On continued volume, CMF and MFI are clear to remain short, people. And then we have additional momentum to the downside, looking for 61.50, people. Look, 61.50. And while we're doing that, let's get right back to the EMAs here. 61.50, just a tick short. You can take that off right now at 62.50. 62.75. Getting gravitated at 63 level again. Back to the EMAs here. Below 61.50 becomes 60, people. That is 60. Remember, 63 is through now. Definite profit to lock in here. That's 2.25 points early on AM. It's now 9:39 AM Eastern Standard. 63 holding as resistance and down. 62.75, 62.50, 62.25 on the low here. Looking for continued movement to the downside on an open, shortly after market open, fairly strong sell-off this morning. CMF and MFI are clear to remain short, people. Sure thing, 2.25, 2.5 points after the preferred end. At 65.25 is hit. Once again, our methodology has identified with and we have taken in real time a high probability trade to the downside. This is Jeff Killian, Chief Market Strategist for the Inside Technician. Managing the trade in real time, 0940 hours, 7/8/2014. MTM is 62.75, 62.50. And back up 63 once again, getting magnetized at a 63 15-minute level. If prices hold 63, there is a possibility for a continued move to the downside, but we still have 4 minutes and some odd 10 seconds left within the current 15-minute bar to play itself out. Price stabilize here once again, traders, and do not exceed 63 by a quarter. We have an excellent shot at continued movement to the downside. Right now, we're down again shortly at 62.50, 62.25 MTM. 62.25 after getting in at 65.25. And 3-point gain early on. 3 points times 50 is 150 contract gain times your minimum. Or greater than that. Next level up. Holding 62.50, 62.25 traders. CMF, MFI still clear. To be remains short now 62. Current low, 15 seconds left when this bar. And managing the trade to a lower level now at 61.50. Just still hanging there. Looking for the out now for the last shot out at 63 to lock in that profit. Don't want to get greedy. If prices get above 63, which the high of the current winner bar is penetrating right now, that would be a clear signal. Prices don't hold 63 to get out, and there you are. I'm going to cut the tape. I'm already out of the trade below 63 here, looking for a second leg to the downside. For me, that's 275 today. We'll get into the stats later on everything. That's 2.75 points to me. Times $50 every full point gain is 137.50 times 30 contracts traded today. $4,125. This trade was analyzed, executed, and managed to the price profit targets using the NinjaTrader platform. For any inquiries on our live trading room, this highly profitable live trading room, you can contact us through our website at theinsidetechnician.com and go to the live trading room blog. You can sign up there, or the contact us form within the website. You will be answered back within 24 hours. 9:43 a.m., 094378, cutting the tape. We'll see you again on the next session for the live trading room. Second leg to the downside on this trade identified by this methodology. Have a target set at 60. It either will or it won't go. And if it doesn't, we'll be out of it immediately after the secondary preferred entry at 62. Now, the CMF and the MFI are clear to be short. Across the board, the setup is still strong. There's a lot of room to go. We have definite targets set up all the way down to 58.50 so far. And today is the day that we could get the second leg of a healthy U.S. market sell-off and capitalize on even more. 58.50, even more of a profit as we move into the hard right edge. That's 58.50 traders. Trading 61.25, 61.50 MTM. Looking for the second leg to the downside, people. 0950 hours. 7/8/2014. $10,000 or 12,000 contracts would surely give us plenty of institutional selling behind getting through down to lower price levels. Across the board, once again, have the trendline violation now taking place we talked about earlier on the stochastic momentum, clear, additional confirmation. MACD disparities real wide, clear. We're through the 61.50 15-minute level, that's positive. CMF and MFI, CMF clear. on both counts. Moving down. Second leg in process. We're good. Just about down to 60. And there we go. Additional volume coming in. Looking to get to 58.50, people. That's 58 and 50. Hey, Brad, are you with me on this? CMF MFI remains clear. Be short. 60 levels already been hit. Could have been down on the price profit target there on the second leg of this trade, getting in at 62, possibly 61.75. Right. Even if you're in at 61.75, you're looking at 60. That's another point and 3/4 out on a rally 60. Next target to the downside is 58.50. Okay, to get out on a rally, here was the choice. Now prices trade up if they get above 61.50. I mean, at this point, there'd be no reason to stay. If they find 61.50 as resistance and hold that level, then we're looking at possibilities of continued movement to the downside. Getting back to the EMAs here to look at a larger picture or volume here. You've already hit your 60 level here. Here's your 58.50. And below that, you're looking at $56 and $75. Price is back up now, but stabilized at 61 flat. So second leg on the trade, the call was in at 1962, right here at this point, out at an incremental price profit target on the second leg at 60 for 2 points. Even if you got in late, 61.75, that left you with 1 3/4 points on an additional leg to the downside. Price is now moving down again. Long-term holders, you're good. No nosy neighbors, the block is out. Institutional selling, moderate. After the secondary volume, large spike came in above 21 period average. And 60s hit once again. There you have it, an absolute stellar second leg hit again. Now, to get through this, we want to get to 58.50. But right now, you're already there at 60. After 62, that's a full 2 points once again, or 178 if you got in a quarter late. Once again, this second leg of this trade that we called originally back here for the down move, based on all of our analysis of our methodology here at the Inside Technician, is all analyzed, executed, managed through the NinjaTrader platform. I'm going to cut this tape now, and we'll pick it up on the next live trading room session trade. 9:55 a.m. now, 7/8/2014.